good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscars. Oh, we've moved it. 765th video, and thank you so much for watching. Traders, if you don't know me, I am Oscar Carboni. I've spent almost 30 years in this business analyzing charts, working down on the exchange, running around in these markets, and I know a lot of great techniques that I come out and teach you all the time. Traders, this video is being filmed on Sunday night for Trading Monday. That would be August 22nd, 2011. What do we have on the board for tonight? Well, before we get into this thing, we must let you know that futures trading is extremely risky and can cause substantial financial loss. If you do not understand this game, if you do not have risk capital to lose, you certainly shouldn't be trading. But for you traders out there that do get it, that understand the risk and have risk capital, rock and roll. And the traders that put their stops in first, of course. What do we have on the board today? We have a couple of things that we looked at in our last video, so I want to do a quick review of that. And then I want to talk about how the Nasdaq is lagging behind the other indices. We have S&P, the Dow, the Tranny, the Russell. They've pulled down to a certain level, but the Nasdaq seems to be lagging, and I'll show you that. So traders, what's on the board? I showed you something called the bull and bear pennant flags in our last video, and I said it looks just like this. We have one in bonds. What should happen next is a rally out. And then I showed you one like this and said we have that in the DAX, and what should happen is we should break down. Both things did occur, traders. Hello, technical analysis. That pennant flag, it had a pole, it comes to an apex, broke out, and bonds really did take off. And here, the bearish looking one, the DAX had a couple of really smashed down days. So that worked really well. Another piece of analysis that we worked on together in our last video, Wednesday last week, I put out a video that basically pertained to Thursday and Friday's trading. So I left it out for Wednesday night, Thursday, and Friday. And in that video, I said flat tops produce market drops. And I showed you some charts. And I said, look, these are flat tops. This is how it works. They produce market drops. And on Thursday and Friday, this S&P and Dow is going to get hammered. What happened Thursday and Friday? The S&P and the Dow got hammered. Traders, once again, flat tops produce market drops, right? Go technical analysis. I have no crystal ball. I am doing the techniques that you can do at home, that we can teach you at the OMNI Trading Academy. I have no special gift that you don't have. If you know how to use something like a flat top, if you understand how to trade or position yourself around the bull or bear pennant flag, if you know how to look at many of the formations that we learned together at the OMNI Trading Academy, it will absolutely help enhance your trading style. So we've had this on Thursday and Friday. Pennant flag both work, bonds and downside DAX. The flat top absolutely produced a nightmare for us on Thursday and Friday, right? We've seen that. Today, the new addition to this board is the Nasdaq lagging. What do I mean by that? Well, the transportation average, the Dow Jones Industrial Average, the S&P, you look at those charts on a weekly basis, and they've broken the 200 bar moving average. Traders, you've heard me mention this many times. The 200 bar moving average is really closely watched by the street, closely watched by fund managers. If anyone is worth their salt in this game, they keep their eye on the 200 bar moving average. On a weekly chart, if you start penetrating the 200 bar moving average on a weekly chart, it is a telltale signal that something is amiss and the markets could continue to break lower. With that in mind, I'm going to show you some charts with the 200 bar moving average on the weeklies, and I'll show you why it looks a little bit troublesome and the Nasdaq is lagging behind. It has not come down to its 200 bar moving average yet, but we think it's on its way. And you know what, traders? It's getting a little late. It is Sunday night. I want to go back down into my office and see the markets. So let's get right into the charts. With no further ado, let me show you some charts. Okay, traders, Dow Jones Industrial Average Daily Bar Chart. This is the very same chart I put before you in the last video. It was on Wednesday evening, and I said, traders, flat tops produce market drops, and showed you a bunch of examples where that did work. And I said, on Thursday and Friday, we should get this. Will we crack? I wrote the words, yes, we will on Thursday and Friday, according to my analysis. What happened? Look at this next chart. Wow, traders, look at what happened off that flat top. Flat tops produce market drops. Look at the big drop. We gave this to you on a Wednesday night for Thursday and Friday. This would be Thursday's breakdown day, and this would be Friday's. We went down, and then Friday we went down more. Wow. So that worked really, really well. So please remember that flat tops do produce market drops. You saw it for your own eyes. We checked it out before it happened, called for it. It did happen. Bravo once again, technical analysis. Okay, traders, the bullish pennant flag. The example in the 30-year T-bond. I showed this very same chart to you on a Wednesday night, our last video, the same night that we did the flat tops. And I said, look at this. That is a bullish pennant flag. And what happens from a bullish pennant flag is a breakout to the upside. Here's your flagpole represented by these big down days. And here was your pennant or flag. And it should break out to the upside. So that's the chart I put before you on Wednesday night and claimed this analysis calls for an upside run in bonds. Let's look at now an updated chart as of Friday's close. Va-boom! There it is! Look at this thing go! The bullish pennant flag produced a really nice breakout, traders. These techniques really do work well. I hope that you use them. I hope you heed the warnings when you see these. If you're short in something like this, that is a warning that you should get out at the least. It may not make you get long, but it could stop you out of a bad trade. So get to know the bullish pennant flag. Let's look now at the bearish pennant flag and review what we looked at in Wednesday night's video. Okay, traders, Wednesday night, German DAX daily bar chart. The bear pennant flag opposite of the bull. This was the example I put before you. This was the close Wednesday. And I said, look, Thursday and Friday you should be getting this because that's what the bear pennant flag is calling for now that we've reached the apex. And what happened? This is what happened, traders. Look at the breakdown. Well, bam, and then the next one. That is pretty significant. The bear pennant flag, once again, bravo, technical analysis. You can't argue with this stuff. Okay, traders, that was then. This is now. Let's talk about Sunday night this week, August 22nd, for trading on Monday. The Dow Jones Transportation Average, deemed the leader of U.S. indices, has broken down so far through its parallel channel and has now challenged the 200 bar moving average, has gotten through it and settled right here for the week. So here's the weekly bar. Here's the 200 average. You actually settled below it. We hope to not see another week settlement below here. This is 1 week, about 3 days out of the week, it is down below the 200 bar moving average. If this week it opens up and drops further, it will be confirmation that we still have more downside coming our way. So let's hope somehow we get a turnaround this week and get back above. But for now, we don't trade hope. We trade what we see. This is not a good development. This day we know does not exist yet. This week, I should say. But we have this one in place already, and past the 200 is troublesome, worrisome, makes me wonder what's coming next. I know one thing. No matter how bullish you may be, if you see something like this, you better change your mind, at least start thinking sell the rallies if you're not paying attention. Let's look at another chart. Okay, traders, our favorite, the E-mini S&P, another weekly bar chart. Not good for short-term market movement, that is for sure. Here is your 200 bar moving average. Remember, very closely watched by managers in the street. When it gets around the 200 bar moving average, you'll see a lot of movement, right? Big break if you go through it, or a lot of respect if you get near it, like here. Then here it stayed around a little while and then a big breakout. Well, look at what's happened here, traders. We are now below it, and this is our second week below the 200 bar. That is not good for short-term market movement. It augurs for lower pricing, and I think we drop on Monday. In fact, Sunday night, we're looking to go short Nasdaq, and I think that is the play to make. So let's see what happens, but looking at that S&P, I say you sell the rallies on this bad boy for Monday. Let's look at another chart. Okay, traders, the Nasdaq weekly bar chart, is it lagging? Yes, it is. Why is it lagging? It is still up here in what's considered its parallel channel. Because here's the bottom line, right? So it's up here in its parallel channel. It's just about messing with it now, and it's nowhere near the 200 bar moving average yet. It is lagging, and it looks to me like it needs to take a nosedive down towards the 200 bar. The leader, the Dow Jones Transportation Average, is there. S&P, which is a follower, is already there. Nasdaq generally is a leader, and it has not gotten there yet. So unless somehow it magically holds right in this area this week and takes off, the likely event is not this, but this, moving down to the 200. Traders, take a look at your Nasdaq weekly, compare it to your other indice charts on a weekly basis. You will see what I'm talking about here. The 200 bar is way below, and Nasdaq is the weaker sister right now of the indices that we trade. Pull your own charts, do your own homework, compare Nasdaq to ES or the emini S&P, and tell me what you think. So, traders, you've seen the charts. There's my technical argument for why the Nasdaq looks like it's lagging. And bravo for the bull pennant flag. Bravo for the bear pennant flag, because both of those really worked well. And if you don't say this in your sleep, you haven't learned anything. Flat tops produce market drops. Learn that and live it. All right, traders, I want to get out of here, so I'm going to be quick. Give me a calling time, day or night, 702-629-4755. Thank all you OMNIX for coming out on Saturday to the seminar. I thought it was great. I really enjoyed myself. I enjoyed your company. Thank you so much for coming out to see me. I will not forget that, you OMNIX. If you're in my room, I will keep you in mind. You came to see me. I thank you very much for that. All right, traders, I will speak to you tomorrow night. Let's see what happens tonight here in the markets. Don't forget, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.